Disclaimer. This video is for entertainment and educational purposes. It is not a suggestion to buy, sell, or hold any asset. Please do your own research and due diligence when choosing what to invest in. Now, on to the analysis.
Hello everyone, welcome to the channel Dad's Market Stats. In today's video, we're going to be discussing which one is better for a small account. Is it better to invest in dividend stocks, or is it better to sell options to collect premiums? But first of all, we're going to take a look at our small account that we're managing here today. As you can see here, there's $58 in the buying power. We did manage to buy 100 shares of Bitfarms, as you can see here, from one of the put options that was expiring in the money. So we were assigned 100 shares of this company, right? Let's take a look at the history there so you can see that. So, correct. So we had sold a $3 put expiring last Friday, and we made $35 from that. We also have sold a $2.50 put expiring August 16th, and we made $20 from that there, okay? Not sure why it doesn't say how we purchased the 100 shares, but yeah, we were assigned 100 shares of Bitfarms from that $3 put. So now we have 100 shares with a dollar cost average of $3. So what we're going to do now is we're going to try to sell a covered call on those 100 shares. And we want to look for a call option that is above our dollar cost average right here, which is $3. Okay, so let's go ahead and take a look at the Bitfarms options. We're going to look to sell a call. Now, which expiration date is selling a strike price that's above our dollar cost average? Well, I already checked this in advance. The September 20th one is selling this strike price for $3.50, but it's only given $5 for this strike price. So we're going to go a little bit further out to November 15th, which is when the FOMC has their second meeting that's coming up this year. So let's go to that date, November 15th. As we can see here, we are seeing that there are people buying this strike price of $3.50 for $25. So let's go ahead and make an offer to sell this option for $25. As we can see here, there's 124 people that are interested in buying this option from us. So let's go ahead and choose this option right here. As you can see, we're going to sell one contract because we have the 100 shares. So we'll sell one contract for $25. All right, good. Let's review this order really quick. It says here you're agreeing to sell 100 shares of Bitfarms at $3.50 on or before November 15th. If you aren't asked to sell Bitfarms by then, you'll keep your collateral and the full $25 credit. You're also paying regulatory fees of 3 cents per contract. So we're going to go ahead and submit this order right here as done. Great. So now, as you can see here, ladies and gentlemen, on our small account, right, we've only invested about $600 into this account, and we've already collected in premiums. Let's see how much we've collected in premiums on this account, okay? We can see here, with $600 that we've invested, we've collected $25 plus 35, which is $60, right? $60 in premiums. Now let's take a look at this other company that we're investing in, Bluebird Bio. You can see here on the history here, we've also collected premiums here, right? From this covered call that we sold expiring August 16th, we collected $10 here. So we've collected $70 in premiums, only investing about $600 into this account. So which one is better for a small account, to invest in dividend paying stocks or to invest in selling options in order to collect premiums? For a small account, it's much, much better to sell options to collect these premiums. Because as you can see here, if we would have invested $600 into a dividend paying stock, like let me give you an example of a dividend paying stock, Apple, right? Apple stock is a dividend paying stock, right? Unfortunately, Apple stock is $205 for one share. So if we were to invest those $600 into Apple stock, the most amount of shares that we could probably get is 3 shares of Apple stock. And how much does Apple pay per share when they give out a dividend, when they pay out a dividend? Well, they pay out a whopping 25 cents per share. That's right, 25 cents per share. So if we would have bought 3 shares of Apple with those $600, how much would we be making every quarter? We'd be making 75 cents. Okay. So that is what we would be making every quarter that Apple pays out a dividend. Okay. So 75 cents to wait 3 months to make 75 cents on a $600 investment. That is way too long for such a little amount that we're going to get back, ladies and gentlemen. So that is why when you have a small account, as we have one right here, okay, when you have a small account, it is much, much better to sell options in order to collect premiums. So that way we can receive more income than we would by investing in dividend accounts, okay? But let me show you another example, ladies and gentlemen. Okay, let's take a look at our main account now. As we can see here, we're on our main account once again. Now, on our main account, we've invested more money into this account, okay? But however, let's take a look. I'm going to give you an example here, okay, of this BlackBerry stock, right? I have only invested $250 into this company, BlackBerry, okay? Now, let's take a look at the history so you can see that, okay? You can see here in this history, I have invested only $250 when I sold this $2.50 put back in June, and I received $28 from $250 that I invested. I received $20 here back in June. Now, July 1st, I was actually able to buy these 100 shares, right? From the $2.50 put, I bought them for $2.22. Okay. Now, after I was assigned those 100 shares from that 250 put, then I sold a covered call on those 100 shares and I received another $14. Now remember, we only invested $250 into this company. So I've already made $28 here, $14 here. Okay, now this option, which expired on July 19th, expired out of the money. So my 100 shares were released from capital. They were not called away from that covered call. So we were able to sell another covered call expiring August 16th on July 21st, which was the week after this option right here expired. So I already have made in 2 months, I have already made $28 plus $14, which is $42 and another $10, which makes that $52 that I've made on a $250 investment. So, ladies and gentlemen, once again, $250 will only buy me 1 share of Apple stock. And then if I have with that 1 share, I would have to wait 3 months each quarter when Apple decides to pay the dividend on that 1 share that I own. And that would give me a whole 25 cents, ladies and gentlemen. So waiting 3 months for 25 cents just does not make sense when I could just easily sell these options, sell these premiums on BlackBerry stock and collect $52 in less than 2 months. So that is why selling options in order to collect premiums is much, much better way of making passive income when you have a small account. Okay, ladies and gentlemen. Now, this coming week, it looks like we're going to take a big hit. We're going to feel a lot of pain this week, ladies and gentlemen. And why is that? Well, because Bitcoin, let's take a look at how Bitcoin is doing right now. Okay, as you can see here, Bitcoin has dropped massively. They have tanked all the way down to $54,000. Okay, close to $55,000 now. It's coming back up, but still, this is a big difference from what it closed at last week. Last week, as we can see here, right, August 2nd, it closed at $61,000. So it dropped about $7,000 only on this weekend. Okay. This weekend alone, it dropped close to $7,000. Now, we already know from some of the news that um, the market was expecting rate cuts this month. The Fed may have waited too long to make these rate cuts. And now, because of the jobs report that came in, where we saw that unemployment rate was kind of high and the average salary was kind of low. So, because of that bad news, the stock market has taken a hit. All right. And this would include any assets, right, that people invest in, like Bitcoin. So we're going to be feeling a lot of pain this coming week. But however, remember, ladies and gentlemen, whenever there is bad news, that is always going to be an opportunity for us to hedge ourselves. Okay. So what are we going to do this coming week? Well, we're going to take a look at some puts. Again, we're going to keep our eye on that September 20th expiration date. Okay, ladies and gentlemen, we're going to try and sell more puts, right, on that expiration date, September 20th. Now, take a look at these puts here, ladies and gentlemen. I have already sold 3 of these options at the strike price of $3, $2.50, and $2. Okay, but this coming week, if we see this stock, Bitfarms, go down to below $2, let's say it gets closer to $1.50. Well, we're going to start looking to sell this $1.50 put. So now we're going to hedge ourselves even more by selling these $1.50 puts. And depending on how much premium we can get with this, we might only have to invest $120 to sell these put options. So we're going to keep an eye on what develops in the market this week to see if we can sell these $1.50 puts. And if we're not able to, then we're going to continue to sell some of these $2 puts and perhaps receive a higher premium than we received last week for the same put option. Okay. So let's keep an eye on this week and see how we can hedge ourselves. But that's the video for today, ladies and gentlemen. I hope you're enjoying some of my shorts. I'm trying to put out shorts whenever I can so that you'll be able to see what my picks for option selling are for this week. Something that you could try to sell, and perhaps I won't be able to, but I'm still going to show you the picks so that if you are able to make those investments, sell those options, you could do that yourself. Okay, ladies and gentlemen. But any stock that you're interested in, you can use this strategy, the wheel strategy, for any stock that you're interested in. We're already doing this with three different companies, right? We're doing this with Bitfarms right here. We're doing it with BlackBerry, and we also doing it with Bluebird Bio on the other small account, right? Now, as you can see here, I also have bought 200 shares of this stock right here, LQR stock, right? We were trying to swing trade this company because they don't sell options yet here. So we're going to wait for this stock to go above our price that we bought the 150 shares at, which is 85 cents or so, around that price. So we're going to look for this stock to reach 90 cents again before we start thinking about trading these shares out for a profit. Okay, so that might take some time, ladies and gentlemen. So we are waiting for that to happen. We don't need this money right away. This is our savings account. When you invest in the stock market, ladies and gentlemen, I really do suggest that you do not use money that you really need right away. Use money that you can afford to put in your account for a while, for some time, right? Before you can sell for a profit. So that is my suggestion to you, ladies and gentlemen. Now, I hope that you enjoyed the content that I'm putting out. If you do, ladies and gentlemen, if you're new to this channel or you're not yet subscribed, please smash that subscribe button so that you can continue to see more videos like this and see how you can compound interest on your savings. All right. So that way, by managing your own finances, you can keep all of the compounded interest that you make on your capital and not give it back to the bank. All right, ladies and gentlemen, I hope you have a great week. And as always,
This has been another video from Dad's Market Stats. Thanks for watching. Don't forget to subscribe, comment, and like the video. If you know someone that can benefit from these videos, make sure to share it with them as well. Until next time, and remember, let's grow together.